What is a share of a company? Share, also known as a stock, which is sometimes used interchangeably or sometimes referred to as shares of a company, is a unit of ownership in a corporation or financial asset. When someone buys a share, they become a part owner of the company and they're called shareholders. When an individual like you and I purchase a share of a company, we are purchasing a percentage of ownership in that company. Also, the number of shares that a person owns will determine the percentage of ownership that they have in the particular company. So let's say, for example, Company A has 1,000 shares to make up 100% ownership of Company A. Company A lists those 1,000 shares on the U.S. stock exchange for purchase. If a shareholder or an individual like you and I decides to purchase 100 of those 1,000 shares, then we would own 10% ownership of Company A. Owning shares of companies can mean different things for different companies. Sometimes shareholders receive dividends for owning a share in the company. You're allowed to vote, so you may receive information about when shareholders meetings will be, and you should get company updates about what the company is doing to progress or make money or manage debt. The company's main goal is to make the shareholders money. So a shareholder purchases the stock in a company, and in exchange, they're giving ownership in that company. And the company is raising capital so that they can go on and make more money for the shareholders, i.e., grow the business. Before a company can list its shares on the open market, it must go through a process called an IPO. What's an IPO? Click here.